Well, that's right. This year's budget saw tremendous focus on the banking sector, and there were some reforms announced as well as some exciting announcements that have changed the landscape of the banking sector, both for the private and PSU players. So before we do any analysis, let's first walk you through what some of those announcements were and why they're so important. So two PSU banks are to be divested this year in addition to IDBI banks. So that's the first and most important announcement. The government will be looking to invite private participation into two PSU banks, and that of course will enhance value creation in the sector, and of course perhaps some beleaguered PSU banks, the likes of Lakshmi Vilas, and there are a few others that haven't really been performing to par, might get a new lease on life, so to speak, with a new management entering, and perhaps get some new capitalization as well via equity raises from the market. The next thing is that the government expects a total of 1 lakh crore from the divestment in PSPs this year. So that means that IDBI and these two other banks should collectively generate a fair amount of capital for the exchequer this year. Then all this is of course subject to changes in the Banking Act of the 1930s and 40s. So the FM said that they will bring in the necessary changes in order to allow PSU divestment, and particularly for the said mentioned banks. Apart from this, one general insurance company will also be divested, and of course we will also see the LIC IPO this year, which is also included in the overall 1.7 lakh crore divestment target for FY22. Now, in terms of giving banks that are in trouble fuel to manage stress and future credit growth, it seems that 20,000 crore will be allotted to the PSPs for recapitalization this year. While it does seem small, there are 4 to 5 banks which have capital adequacy of just under 13%, and the street suspects that that's where those funds will flow, just to shore up those balance sheets in the near term so that they're complying with regulations before they can hit either the AT1 bond market or the equity markets for further capital raise. Now, there will be creation of an ARC, another word for a bad bank, which we've been hearing so much about. It seems that the government has taken the stand that the best way to deal with the legacy NPA issues within the sector is to take all those loans and move them into an ARC. That will then be moved into an AMC, and ultimately these assets can be sold off to an AIF or various other interested parties once price discovery has happened. The FM also believes that this whole exercise will lead to a lot of price discovery, and if you consolidate all the assets under one roof, it will perhaps enable a slightly higher price or better pricing for these assets. So there will be a lot of interest on the street, and of course this will all happen over time. We'll see how each PSU bank goes about moving its portion of bad loans into this ARC, how much it's acquired for, and how the mechanism of this whole bad bank really works. But these were the key takeaways for the banking sector.